Hello everyone, FRM Part 2 syllabus for 2024 has been released. Let's go through the changes quickly. Quite a bit of changes in credit risk and current issues we already expect. But before getting into the details, let me just tell you, remind you that the syllabus is the same throughout the year. So May, August and November, the batches will be having the exact same syllabus. The syllabus changes from year to year. FRM Part 2, as we already know, that current issues subject changes drastically every year, because by definition it is current issues. So whatever is going on in the economy, for example, we'll be looking at Silicon Valley Bank and Credit Suisse and all of that this year. So the syllabus for current issues any which ways changes. So if students are preparing before the syllabus is out for the next year, we always advise that current issues is something that you should wait. Other than that, all the subjects you can complete absolutely well, because there are minor changes normally on a year-to-year basis. But this year we have quite a few changes in the credit risk subject. Market risk, operational risk, liquidity risk and investment risk is almost untouched. We'll go through the barely minor changes given over there, but we have quite a bit of changes when we're looking at credit risk, which is a little unexpected, or I would say, but the change is good. The change is good for the students. It's reduction in syllabus, so you can be a little happy about it. And the current issue syllabus is really interesting, and I'm looking forward to studying, reading, and teaching the same. So let's get into the changes bit. And normally what do we do? So the chapters which are new, of course, you have to wait for them to be completed in the live class after the textbooks are out, and then we cover those. The deleted chapters you of course ignore, and the chapters which have minor tiny changes, which I'll explain which is which. So if there are very barely any changes or minor changes, in that case, you can do the chapters as it is. And once the textbooks are out, I can always update and let you know if there is any addition, changes and all. And of course, whatever it is going to be done in the live class and it is going to be shared with you. So you don't have to worry about any of the changes, new additions whatsoever within the chapter or the entire chapter, either which ways. Now, when I'm looking at the syllabus, so when I see the deletion, basically, there are 7 chapters that have been deleted from credit risk and 5 have been deleted from current issues. And when I'm looking at the additions, so I'll show it to you over here. So we have about from here. Yes. So this entire 11 chapters have been added in credit risk, and these 7 chapters have been added in current issues. So basically, when I'm looking at additions and deletions, it is entirely credit risk and current issues. The other subjects, the chapters are untouched. In terms of number of chapters, no additions, no deletions, very tiny minor changes are there. Whatever we are looking at in terms of the curriculum changes, a major change this year has been done in credit risk, and current issues we already know every year, so there is nothing surprising or new about it. Current issues any which ways has to change. So from one year to the other, to the next one, we always make sure that we always tell the students not to do the current issue subject, because doing that will not make sense, because you know that subject goes through a major revamp. But credit risk is a welcome change, actually a welcome change this time. So when I'm looking at the entire syllabus, I would see about 20% new curriculum, 12% deleted. Don't get disheartened. Still, I would say there is more consolidation that has happened in credit risk. So I don't expect the syllabus to be increasing in volume that much, although you see that 20% and 12% over here. So don't worry about it. And the changes are barely anything, so we don't even need to worry. In fact, if you see, when I'm looking at credit risk, actually, couple of chapters that have been added are from the deletion credit analyst, and there was another chapter, credit risk, credit derivatives, rating assignment methodology. I'm really happy actually that rating assignment methodology chapter has been deleted. For those who've studied earlier, they would know that chapter was quite boring and irritating. That was the only chapter I found extremely irritating, and a chapter which I did not like teaching again. But other than that, so that is deleted is very, very good personally. But otherwise also the syllabus has been consolidated and improved a little bit. So let me get right to it. Let me explain the changes first, because that will be very easy for me to explain, and it is very minor changes. So there is barely, there's just one new LOS added in correlations chapter in market risk. So this is the only change with regards to market risk. One LOS added. I think it's on quanto option or something. I'll just jump into it and explain to you. Yes, quanto option has been added over here. Apart from that, if I'm looking at capital structure, minor change. I think the LOS has been reworded actually, and there's not much of a change over here. When I'm looking at, again, these are more of credit risks over here. When I am looking at, just a moment. Yes, so when I'm looking at the beginning chapters, there are some changes in credit risk, which is, one LOS added or one LOS deleted in this chapter, risk measurement, etc. So barely any change over here. I'm not getting into the specifics. I'll give you the list of changes also separately, so don't worry about it. Apart from that, hedge fund, there was one LOS deleted actually. This is comparison of hedge fund with mutual fund and all. So not even an important LOS as such, which they have deleted. Over here, like in case study, third party credit risk, they've just added the lessons to be learned from the from this case study and all. So I barely see any changes over here. And as I told you, the chapters which are deleted, mainly from credit risk, and then these are from current issues. So these are the deletions that have happened. In current issues, primarily, we've got the AI part and machine learning part removed, blockchain and all that. And again, we have AI introduced in a different format, in a different context. We'll discuss the changes part with credit risk and this one. So investment risk, we've just got one LOS deleted. And climate risk, again, we've just got 3 LOSs deleted. So this chapter has been shortened. And operational risk, we have some small tiny changes. Credit risk also, we have some small tiny changes. Market risk, only one change over here, one LOS added over here. But rest of the changes totally in terms of additions in credit risk and current issues. Let me now come to current issues first, because that is again easier for me to explain. So we've got an entire chapter, quite a heavy one, I would assume, Silicon Valley Bank, because this was actually a major disaster. And it's good that in a very detailed manner, from liquid risk perspective, from interest rate risk perspective, from the entire culture and the risk aspect of the bank and the way it has, fallen apart, and the lessons we learned, everything with regards to Silicon Valley Bank has been included over here. The second one is Credit Suisse was also a very, very big event, and that has also been covered in relatively a detailed manner. Then we've got a few chapters, which is with respect to artificial intelligence, one chapter on crypto ecosystem, and one chapter we are discussing, one reading is based on data resilience. So that is basically information communication technology. Because again, as we're looking at the financial sector, it's all about cyber risk and tech, basically the entire data being stored in the way we are communicating and everything. So we've got Silicon Valley Bank and Credit Suisse, which is seeming very interesting. AI, in terms of, we are trying to do AI from the perspective of, how would I look at AI risk? How is AI going to be threatening me in future? How should I develop the risk culture around the adaptation of AI? Because with OpenAI and everything, we know that you cannot do away with AI. I mean, that is going to be a part of your system. How does using AI and data driven by AI, for example, in terms of my models, valuation models or credit risk models rather, and what could be the risks because of it? So I'm studying AI from that perspective. And other than that, digital resilience and all I told you is going to be a very simple chapter. So digital resilience, crypto ecosystem and all seem to be very, very easy and all. AI is from that point of view, so it's going to be interesting. But these two chapters I'm really looking forward to studying and teaching. First is studying. When I'm looking at credit risk, basically, so just a moment, I'll just go to the detailed. I am carrying the detailed version of the syllabus in hand. Just a moment. Yeah, so when I'm looking at it, it's relatively a couple of them are theory. So when I'm looking at, let's say, for example, fundamentals of credit risk. So credit decision, credit analyst used to be 2 chapters earlier. So those 2 chapters, credit decision, credit analyst has been deleted. And now we've got this one chapter, fundamentals of credit risk and all. When I'm looking at governance again, whose responsibility? So these 2 chapters are replacing that one. Credit risk management, again, loan provisions, credit risk analysis. Again, it's relatively on the non-numerical side of it. Credit scoring has got quite a good amount of changes. Even earlier, this credit scoring chapter was quite interesting. Even now, when I'm looking at the LOSs, it's seeming to be very, very interesting. Country risk is a very easy theory chapter. It's interesting because at least in the class, I enjoy it thoroughly. I have to hold back a lot of things which I want to say. A lot of things I actually blurt out with regards to the geopolitics and how everything is. And particularly when I'm looking at country risk, I think, in my opinion, in a year or two, they will remove it from FRM Part 1 curriculum. Because that's what they do if they want to make any kind of a shift of a chapter from one level to the other. In that case, they keep that chapter in both the levels for a while, for a year or two, and then remove it from the level they wanted to remove, so that not a single batch is there who has not studied country risk at all or that chapter at all. So that's how they do it. So I'm expecting country risk to be removed in a couple of years, maybe next year itself from FRM Part 1. Now, these chapters, when I'm referring to default probability, credit value at risk, and credit derivatives is predominantly CDSs and all of that. Default probabilities will be having a lot of CDS, credit default swaps and all in the curriculum. Credit value at risk will be having VersaSec and IRB models and all. I'll not get into the specifics because only when you study the syllabus you'll understand. Again, this one will have a lot of CDS, as I was telling you, credit derivatives. So when you're looking at these three chapters, the deleted chapters, parts of it has been included over here. A lot of revamping has been done. These new chapters you'll have to do from scratch, even if you've done the deleted chapters earlier. My sincere recommendation, all the new chapters that have been added, recommendation, you have to do it. There is no choice. So the deleted chapters you ignore. So if any student had studied 2023, those deleted chapters, it's okay. You'll find these chapters maybe easier. Some overlap might be there, but actually these are absolutely new chapters. And when I'm looking at central clearing, for example, derivatives and central clearing, it'll have a lot of CCP and OTC derivatives and DPCs and all of that in the central clearing chapters. Derivatives, yes, in the derivatives chapter, right? 1 second, derivatives 30. Okay, and central clearing again will be having CCP. So both these chapters will be having a lot of central clear. Actually, I was confused between the number of chapter number. Derivatives and central clearing both will be having a lot of central counterparty, OTC derivatives, and all of that that aspect. These will be having a bit of numericals in these. And this, as I told you, is a new is a shift from F1, but it's not the same as FRM L1 also. So it's not the country risk. If you've studied in FRM part 1, don't think that the chapter is exactly going to be the same. It's different. All right. And yeah, rest is okay. So this is a new addition in terms of credit risk. Quite heavy changes in terms of this subject, credit risk, but otherwise it's good. It's very, I mean, I'm happy with the change this time. And after the chapter wise summary, so earlier I had shown you just a summary of the changes. So if I'm looking at the first sheet, for example, I just gave you a numerical summary in terms of the changes. I gave you the list of new chapters, changed chapters, and deleted chapters. Deleted chapter numbers are not available for 2024. It's available for 2023 only, obviously. Then I gave you a list of chapters. All the chapters list is there. The entire syllabus is there with a summary of the change for every particular chapter. That this chapter has got one new LOS, changes marked in yellow, orange for the new chapters, and I think blue for the deleted ones. And then I move to the LOS wise change. So here the entire chapter 1, for example, the entire chapter 1, these are the LOSs. This was the LOS number in 2024. This was the LOS in 2023. So every LOS by LOS, you have the mapping available. I'll make this file available for you, so don't worry about it. So if there's a new LOS, obviously there is no corresponding old LOS because this LOS or this point, this subhead has been added this year. Normally one LOS or one subheading ideally would be like an average of 1 or 2 pages or so. And credit risk, I think we'll see a lot of changes. So these are the new chapters added. So they don't have a corresponding LOS. So this is 20F in the year 2024. It was 19F in the year 2023. So that mapping is also there. So you can see, but there is change in this LOS. So therefore it is marked in yellow. There's not much change actually. It might be reworded. So once the books are out, the changes part, then I'll be able to confirm to you whether it's absolutely new, it is totally changed, or there's just minor tiny additions, deletions done in that particular subhead. All right. So new chapters, credit risk, current issues, we're going to be doing it in live class once the books are out and it'll be shared with you. The changes, I'm going to be checking with the book and letting you know whether there's anything to be done. Any and every chapter with the changes you can absolutely do right now. Don't worry about it. There's going to be barely any change, minor tiny changes. And for those chapters which have only one LOS added in a chapter, like quanto option and market risk and all, I'll be doing it and sharing it with you. Deleted chapters, you can absolutely ignore and delete them. Nothing to be done about it. Absolutely. Seems to be good. I'm pretty happy with the changes and looking forward to especially teaching those 2 chapters, Silicon Valley Bank and Credit Suisse and credit risk. All right. Thank you.